Before we talk about the stocks, the general operating environment, the opportunities in telecoms, there was a time we were talking about returns on investment upwards of 15%. Is that still the case?
Yes, I mean, if you look at the returns on equity for businesses like Econet in Zimbabwe, you're looking at a return on equity which is about 45%. I think maybe the lowest return on equity there will be Safaricom, I think around 21%. But it also depends with what the cost of equity is, because obviously as an investor you want a positive return between what is your required return and basically what you're going to get from the company. So it's still positive returns for all the companies that we look at across the continent, which is Safaricom, Econet and Sonatel. And I think it's quite a good space to be in if you're there for the long term.
Now, obviously, I mean, voice penetration is now nearing 60%, but we're told that when it comes to data, we're still below 10%, so there's phenomenal growth opportunities. We're told tenfold growth by the year 2060.
Yeah, sure. I mean, if you look at the penetration rates, I think in countries like Zimbabwe, where I think over a period of time where they've been underinvesting in their network capacity, after they basically invested in their network capacity, they saw a big growth in subscribers. I think right now you're looking at penetration rates around 61% for Zimbabwe, and I think around 64% for Kenya. So the next thing now is basically to drive data growth. But how operators drive that growth is basically a function of two things. It basically has to do with pricing, and it also has to do with the devices affordability. So I think if you just look at the numbers that are coming out in terms of the projections of traffic that are coming out there, it's basically a function of that. Look, you're looking at prices going down, and you also look at on the other side, telecoms operators have been coming up with good product packaging. For example, you look at maybe in South Africa where there have been lots of promotions where you can get free data after midnight off peak, and that has been happening in markets like Kenya. So obviously that in terms of traffic, it obviously put up your data traffic.
Okay, you seem quite bullish about Zimbabwe. Let's talk about Econet, which is one of the drivers of that market. They've pushed up their subscription base significantly. They've moved into the area of mobile money transfers. How's that work for them?
I think basically if you look at Econet right now, they basically control about 70% of that market in terms of subscribers. And right now in terms of 3G data, they are the only operator offering 3G. And they've just realized the opportunity that Safaricom realized a couple of years ago in mobile money. And if you look at Safaricom's revenue right now, about 12% of Safaricom's revenue come from M-Pesa. And now when you look at Econet, they've just launched EcoCash, which they believe will do very well. I think it's a great opportunity in the market. I think there's been a gap, although the two other mobile operators have offered mobile money, but it's not exactly the same product. The EcoCash product works exactly like M-Pesa.
How does it work in a country like Zimbabwe? It's a dollarized economy, so I don't assume that it's cheap to get your mobile subscriptions and pay for the services. And then, of course, agency banking, because you really need to be able to get those transfer services widely distributed.
I think, first of all, when you look at why subscribers use mobile banking, it's because it's obviously cheaper than using the traditional banking means. And also, if you look at the geographical reach of banking branches across the country, they'll probably not be reaching the remote areas. So what it basically, how it basically works is, for example, for Econet, what they're basically doing, they're using some of the post agencies. We have postal centers across the country. So that basically lowers your cost of how much you have to pay to those agencies. And secondly, Econet will employ the agents that distribute airtime. And obviously that lowers the cost of offering that services to your customers.
Okay, let's turn our attention to Kenya. Safaricom, as I said earlier on, coming up with results on the 9th of September. Now, they're the most capitalized stock. They're the driver of the stock exchange in Nairobi. But there are lots of competitors in the unlisted space.
Yes. I think what's happening right now is for Safaricom, obviously, over time, has been a very good, innovative operator. But then, obviously, there are a lot of forces that have come into the market, with Bati being an irrational competitor. But it looks like the landscape might be tilting a little bit. I think at African Alliance, our view is we might not see Bati becoming an irrational competitor over time, because we just looked at some numbers that they published, and it shows that out of the 16 markets that they operate in Africa, 10 of them are loss-making. And if you're looking at the revenue that they make about $2.8 billion in Africa, and they're losing about $780 million.
What's creating those losses? I don't want to focus on Bati, but their strategy was really high volumes, low cost margins.
I think you can only succeed with that model in an environment where you can outsource some of your costs. But if your costs, you cannot outsource them. And for example, if you look in Africa, there are some issues with regards to tax. You have to pay a tax upfront that you cannot pass to your consumer. So those aspects obviously will squeeze your margins, and that has been the problem. Of course, they've been looking at increasing minutes of use, which has not really happened the way they were envisaging. So there is a bit of a challenge, because obviously your cost base is significantly higher, but you're not getting that usage increasing as much as they expected.
Okay, back to Safaricom. Safaricom, because the main challenger to their market share is Bharti Airtel. One of the things that they've had to deal with is a changing regulatory environment. They've had to reduce tariffs significantly by as much as 50%, and then in October they raised it by 1 shilling. How's that going to have a bearing on their balance sheet?
I think at this point in time, just looking at profit-wise, it will be a good thing for Safaricom. But obviously, the impact of that is the cost of telephone costs will become higher for the consumers. So you might see a bit of usage dropping there. Because, for example, if you look at MTN, they reported that in Uganda, after the increased tariffs, there was a slight drop in ARPUs. So obviously, that will be the impact. In terms of profitability, it's a good thing. But I think what we hope for is that obviously your customers will not really stop using voice. But one thing that has happened for now is you look at the SMSs, the rates for SMS were not increased. So you might see a voice to SMS substitution. Okay,
let's turn our attention to West Africa. Sonatel, it's the largest telecoms company in Senegal and the largest stock on the West African BRVM.
Yes, I think for Sonatel, you're looking at being a market leader in Senegal and Mali, which are the key markets of operations. Those markets contribute about 95% of Sonatel's revenue. And I think the next competitor for Sonatel, if you look at in Senegal, is Melecom Tigo. But it's also tended to be a rational competitor after obviously they posted a loss in that market. So we're looking at things starting to improve, and obviously most of these competitors were looking on a price competing basis. Now they've changed their strategy to basically looking at value proposition, which could be a good thing for that market.
Pricing of Sonatel, because the BRVM has been fairly volatile, obviously with the political crises in Ivory Coast, Cote d'Ivoire, and also with investors holding back. You haven't really seen a significant movement in shares.
I think it's always the tendency of market behavior when, especially there's a bit of some news, you basically see some people pulling back. But I think the share price has found some support at around 124, where it's trading at the moment. But we basically believe one thing that will attract investors into that company is the dividend yield, which is quite high, around 11%. So over time, although the share price might not really outperform as much as we expect on companies like Econet, we basically believe that the return that you get from the dividend is quite high. Okay,
before we go to Ghana, why should investors invest in telecom stocks?
I think for now, the main driver for growth is data. That's the next big thing. Although we're still expecting a bit of growth in voice as penetration is maturing, but we obviously expect that data is going to be the next big thing.